Okay. Take that important adjustment of revaluation account PDF separately I have given now.
Yes, ma'am.
Yeah, take that one. If any page is not clear, kindly let me know, dear. I will resend it.
Sure, ma'am.
Yeah. Have you taken?
One second, I'm still
Okay.
opening.
Fine, fine. So revaluation account, important adjustment we are going to do today. These all are extremely important adjustment. This type of adjustment usually comes in exam. And this revaluation adjustment will be helpful for you in which chapters? Admission, retirement, death. So all the three chapters, this will be a great help. So now what is the other name
Yes,
for
ma'am.
this revaluation account? PL adjustment account. Okay. So you should know.
Yes,
Suppose
ma'am.
during exam they may ask you to prepare PL adjustment account. So you should not get stuck over there. PL adjustment account or revaluation account, both are same. So kindly write it down everything. Other name for revaluation account is PL adjustment account.
Yes.
Yeah. Pavitra, good evening, dear.
Good evening, ma'am.
Yeah. Take that revaluation account important adjustment. Separate PDF I have given. Take that one. Taken.
Yes, ma'am.
Yeah. So see, first adjustment will be 1 month salary outstanding. They may give you 2 months, 3 months, 4 months, whatever. But here I have given 1 month salaries outstanding. Rupees 50,000 I have given. So where in revaluation account which side it will come? Any outstanding salary is a liability. Outstanding or salary due or salary not paid yet all means the same. So you should know the different terms in our accounts. You should understand the question. If they are saying salary outstanding, it is direct question. You can understand it's a outstanding liability. They may say salary due but not yet paid. It is also outstanding salary. Salary not yet paid. It is also outstanding salary. So what will be the treatment whenever there is any outstanding salary or outstanding wages, outstanding rent, outstanding interest, any expenses which has become due but not yet paid, that is only outstanding. It's always a liability for the business. So if there is any increase in the liability of the business, what you will do? You have to debit revaluation account. So in the debit side of revaluation account, you will write outstanding salary 50,000. Suppose the question is asking you to prepare new balance sheet, then in new balance sheet you have to show in the liability side outstanding salary. First adjustment is clear.
Yes, ma'am.
Yes, ma'am.
Okay. Now the second. Creditors not likely to be paid or creditors written off or creditors not likely to be arise. All the three different terms means the same. Kindly focus on the question. Be alert. If the question tells you creditors not likely to be paid or creditors written off or creditors not likely to be arise rupees 1000, all have the same meaning. Now what is the meaning of this? Business needs to pay 1000 less to the creditors. So business is earning profit. There is profit because creditors are always liability for the business. Liability is decreasing. When I am saying you have to pay 1000 less to your creditors, creditors are liability. So there is decrease in liability, that is profit for the business. You have to show in the credit side of revaluation account. Always credit side of revaluation account you have to show 1000 by creditors. But the thing is, you have to understand the language of the question. They may say creditors not likely to be paid, or they may say creditors written off, written back also sometimes they use the word, or creditors not likely to be arise. Whenever you find this type of terms, you should understand there is decrease in liability. And if there is decrease, obviously it is profit for the business, and you are going to show in the credit side of revaluation account. Any doubt in this?
No, ma'am.
Okay. Now the next, accrued income. Now what is the meaning of accrued income? Any income which has become due but not received by the business. Any income, it may be commission, interest, any income which has become due, means business has given its services but business didn't receive the income yet. So always accrued income is asset for any business. Any business, accrued interest, accrued commission, anything, because business has given its services but didn't receive its income. In future business will receive its income, so it is an asset for any business, accrued income. And whenever there is increase in assets, it is profit for the business. If asset is increasing, means what? Profit. If liability is increasing, loss. If asset is decreasing, loss. If liability is decreasing, profit. So what impact it will have in our revaluation account? If asset increases, it is a profit. You have to show in the credit side of revaluation account by accrued income. If name of the income is given, you have to write whether accrued interest, accrued rent, accrued commission, whatever given in your question, you have to write that particular name of that income. But you have to understand, whenever before any income the word accrued is added, it is always an asset. And if there is increase in any asset, it is profit for the firm, and now you have to show in the credit side of revaluation account. For example, if there is any outstanding word is added before any expenses, maybe rent, salary, wages. Salary, rent, wages, all are the expenses. Salary paid, rent paid, wages paid, all are expenses. Suppose I am adding one word before salary paid, like outstanding salary. It means expense has become due but not paid. Then it will be transferred to liability. Now it has become liability. Are you understanding? Pavitra and Sachin, are you understanding the concept?
Yes, ma'am.
Yeah.
Yes, ma'am.
Okay. Now we are moving to fourth adjustment, unrecorded asset. Many times what happens in our business, there may be some furniture, or there may be some plant, machinery, anything which is not shown in the book of accounts. Unrecorded asset means it is not shown in our book of accounts. So in that case, suppose you come to know in your adjustment, it is given there is one unrecorded asset, means again there is an increase in asset. Previously you didn't record, now you know that there is an asset which is not recorded. So increase in the value of asset, again you have to write in the credit side of revaluation account. It is a profit. Any increase in the value of asset is always profit. So you have to write in the credit side of revaluation account by unrecorded asset. Whatever, if name of the asset is given, you have to write that name, whatever name is given. Now next, unrecorded liability. Suppose any liability is there, outstanding salary, outstanding wages, but it is not shown in the books. But now you come to know after reading the adjustment in question that there is some outstanding expenses. Then you have to show it in the books. How you will show? It is, what is the meaning of outstanding expenses? If any, it is increase in liability. So it is loss for the business. You have to show in the debit side of revaluation account. 2 outstanding rent, 2 outstanding salary, whatever given in your question. And in balance sheet also, when you will prepare new balance sheet, if the question asks you to prepare, then you will show in the liability side of the balance sheet. If like the same rule applies for assets also, if any unrecorded asset you are showing in the credit side of revaluation account and you are preparing new balance sheet, then in the asset side also you have to show. Accrued income also you are showing in the credit side of revaluation account, and if you are preparing balance sheet you have to show in the asset side. Always whatever given in adjustment, it goes in two places. Always remember whatever given. But if you are preparing balance sheet, then only you will show these things in the balance sheet. Otherwise, if you are preparing only revaluation account, it will go in revaluation account. Understood?
Yes, ma'am.
Yes, ma'am.
Okay. Now next, provision for legal charges made rupees 2000. Always remember, I have said earlier also, whenever any provision is created, for example, provision for depreciation, provision for this bad and doubtful debts, or provision for legal charges, all are liability. Any type of provision is always liability for the business. Now here they are saying provision for legal charges made, means there is increase in provision. Increase in provision means increase in liability. If any liability increases, it is loss for the business. You have to show in the debit side of revaluation account. So in the debit side you will show two provision for legal charges 2000 rupees. I hope understood. Any doubt?
No,
No,
ma'am.
ma'am.
Okay, I hope you people are writing simultaneously, right?
Yes, ma'am.
Okay. Now the next, creditors untraceable. Now what is the meaning of this? See, creditors untraceable means creditors went somewhere and business is not able to trace them. Business needs to make payment to creditors. Business may have purchased goods on credit from creditors. Now business needs to make the payment, but business could not find the creditors. They may have run, they whatever, but they are untraceable. No one can find them. In such a situation, again business is earning profit. Now business will pay to whom? Business is not going to make any payment if creditors are not coming. So in that also revaluation account should be credited because there is profit. So try to understand creditors not likely to be paid, creditors written off, creditors not likely to be arise, or creditors untraceable. These different terms have the same meaning. There is decrease in liability. Kindly focus on the question. This type of question comes in boards. You should not struggle. You should understand whether creditors untraceable. These terms what I said all means the same. You have to pay less to creditors means there is decrease in liability. So what will be the impact? Profit for the business. You have to show in the credit side of revaluation account. I hope it's clear, right? What is creditors untraceable? Yeah. Now,
Yes, ma'am.
Yes, ma'am.
okay dear. Now eighth adjustment. Provision for doubtful debts made on debtors rupees 1000. Same rule, whenever you see provision means always it's a liability. Always remember, you are making provision for doubtful debts or for legal charges or for depreciation or for any other purpose. Provision is a liability. Why it is a liability? Because from profit you are keeping some amount apart in order to meet uncertainty. For example, if you are creating provision for doubtful debts, it means that amount of money will not be utilized for anything in business. And in business, definitely some debtor are not going to pay. So there will be bad debts, loss for the business. In order to compensate that loss, this amount will be utilized in future. So whenever any provision is made, it means it's a liability and this liability will take place in future 100%. So there is increase in liability. If there is increase in liability, loss for the business. So you have to show in the debit side of revaluation account. Next, ninth, we are in ninth adjustment. Unexpired insurance or prepaid insurance. Again, both have the same meaning. Words are different, meanings are same. Unexpired insurance or prepaid expenses. Prepaid expenses means any expense of the business which does not relate to the current year. Suppose business is making accounts for from 1st April to 31st March. During this year, suppose any insurance premium business paid for next year, like for next year, May month, June month, that expense does not relate to the current year. So current year you are not going to record anything, okay, that relates to the next year. Any expense which you are making payment for the next year is always an asset. Prepaid expenses are always an asset. Next year you are going to get the benefit because you paid this year itself. That is why it has become asset. So prepaid expense or unexpired insurance, whatever expense prepaid, it may be rent, prepaid rent or unexpired rent, anything, any expense paid in advance is an asset. So we can say prepaid expenses are assets. If there is increase in the value of asset, you have to credit revaluation account. It's profit for the business. So you will show in the credit side of revaluation account. Now see again, creditors written back. So related to creditors, 4 to 5 I told, which have the same meaning. Different words are used, meaning is same. Again, creditors written back means you have to make less payment to creditors, 4,000. Again, profit for the business, which you will show in the credit side of revaluation account by creditors, 4,000 rupees. And if you are preparing balance sheet, new balance sheet, then there you will show total creditors in inner column. From there you will subtract this 4,000 because you don't have to make payment of 4,000. Creditors have decreased. Then you will show in the outer column after deducting. Understood?
Yes.
Yes, ma'am.
Okay. Now next, 11th. A debtor whose due of 1,000 were written off as bad debts paid 800 in full settlement. Now see what the question is telling. A debtor. Who is debtor? Debtor is a person or a customer to whom business has sold goods on credit. Now he needs to make payment to the business 1,000, but he didn't make because due to any other reason he has become bad. So bad debts. Business wrote in its book, recorded in its book, bad debts account debit to debtors earlier 1,000. Paid 800 in full settlement means after few years or after few months, the same debtor has come to the business whose account has been written off from the books. Now he is no more debtor, already removed from the books. He has become bad earlier. But now he is coming again to the business and telling the business, due to some reason I was not able to pay your debt, but now I will make payment of 800 rupees. Now you cannot, see, listen, you can't write name of the debtor again. You cannot credit debtor. You have to understand, because already earlier you have credited debtor when you didn't received money from him. What entry you would have passed earlier when you didn't receive money from debtor? Bad debts account debit to debtors already. So debtor has been removed. Now this is income for the business. So what will be the entry? See, there will be two journal entry, but in revaluation account you can show in the credit side. First entry will be cash account debit to bad debts recovered account. Then the second entry will be bad debts recovered account debit to revaluation account. So finally, in revaluation account, what will be the impact? It is income for the business. You have to write in the credit side of revaluation account by bad debts recovered. That you have to write. by bad debts recovered, whatever amount given, 1000. Understood, Pavitra, Sachin?
Yes, ma'am.
Yeah, fine. Now the next. All daters are good. We are in 12th adjustment. All daters are good. Hence, just a moment. No provision required. Now, what is the meaning of this? Suppose any provision is created for bad and doubtful debts, you can find in the asset side of the balance sheet, debtors in the inner column, less provision for bad debts in the question. Now in adjustment, if they are saying, whatever point I am teaching you, all these are adjustment points only. In adjustment you will find these points. So if the adjustment says all debtors are good, means there is no bad debts. So no provision required. See, always we create provision for bad and doubtful debts in order to compensate the loss which business is suffering due to bad debts. If there is no bad debts, all debtors are ready to make the payment and business is 100% sure all the debtors will make payment in time, during that case you don't have to keep any provision. So in that case again provision will become income. How? What I said, provision, creating provision for anything is a liability, I said. When all the debtors are good, no need to maintain any provision. Why we are creating provision? To meet the bad debts loss. If there is no bad debts in future, you can what? You can utilize that provision as income. So liability is decreasing. If provision you are not using, means there is decrease in liability, which is profit. You have to show in the credit side of revaluation account whatever provision you have earlier created. By provision for bad and doubtful debt, suppose 1000 you will show. And what about this balance sheet? In balance sheet, how much you will show? You will show the new balance sheet. Again I am talking about new. Suppose in your question old balance sheet, it is like this: debtors 20,000 less provision for bad debts 1,000. And in adjustment they are telling you that all debtors are good, means no need of the provision. Then you have to remove this provision. This you will show in the credit side of revaluation account as it has become profit. Suppose you are preparing new balance sheet for the new firm, there how you will present in the asset side? Just you have to show debtors 20,000 because you are going to receive all the 20,000 from debtors. Understood? Pavitra and Sachin, have you understood, dear?
Yes, ma'am. Yes, ma'am.
Yeah. Now we are moving to 13, which is extremely important adjustment. Very, very important. So what is that? See, half of investment taken by A. Suppose A is a partner, A, B, C, whatever name. Any partner is taking any asset done at book value. Book value means what? What is the meaning of book value? The amount of the assets shown in the balance sheet, that we call it as book value. So suppose any asset is taken by any partner at book value and remaining valued at 15,000. Okay, so investment shown in balance sheet 20,000. Like suppose in your question, asset side investment is shown 20,000 and in adjustment they are saying half of the investment. Half of the investment means half of 20,000, 10,000 is taken by A and A is partner. At book value means you have to divide the investment, 20,000 investment, divide into two parts, 10,000, 10,000. Suppose half of the investment taken by A means 10,000 investment A is taking. But at book value means no profit, no loss. A is taking this 10,000 for 10,000 only, no profit, no loss. And the remaining means the other 10,000 valued at rupees 15,000. So 10,000 investment, the remaining 10,000, now it has become 15,000. Increase in the value of investment 5,000. Now how to do, how you are going to present this? See, if any partner takes any asset of the business, always you have to debit partner's capital account. Kindly write it down. Whenever any partner takes any asset of the business, in journal entry you have to debit partner's capital account. Whoever is taking, suppose in our example A is taking, so what will be the entry? A's capital account debit to investment. Now 10,000 you will write. For example, if the question tells A, he is the partner taking investment at A is taking 10,000 investment at 12,000. For example, if this is the case, then what you will do, that 2,000 value of the investment is 10,000, but A is taking for 12,000 means 2,000 there is increase in the value of investment, that you will show in the revaluation account credit side. Increase in investment means increase in profit. But in this question, A is taking 10,000 investment for 10,000. No profit, no loss in the value of investment. So nothing will go in the revaluation account. Journal entry will be A's capital account debit to investment. When you will prepare partner's capital account, in the debit side of A's capital account, you have to write to investment and you have to write in the amount column 10,000. Means A needs to make payment to the business 10,000. A is taking asset of the business, so he will make the payment to the business. Now if you are preparing new balance sheet, this investment of 10,000 will disappear because already A has taken, so you can't show in the new balance sheet. Now what about the remaining 10,000 investment? Still 10,000 investment is there with the firm, with the business. For that the question is telling there is increase, like from 10,000 it has become 15. So this 5,000 increase in the value of investment is obviously profit. Again you have to show in the credit side of revaluation account. This 5,000 you will show. And suppose you are preparing new balance sheet, now you will show in the asset side investment 15,000. Extremely important adjustment. Any doubt you people are having in this?
No.
Okay. Yes, Pavitra, clear to you?
Yes, ma'am.
Okay. Now 14th, bad debts recovered. Okay, bad debts recovered means earlier debtor was not able to make the payment. So in our books we removed the debtor by passing the entry bad debts account debit to debtors. Debtor we removed, no more debtor. Now what is happening? Suppose after some year, after some months, the same debtor is coming and he is feeling bad that he couldn't make the payment. Now he is ready to make the payment, maybe half of the payment, maybe full payment, or maybe whatever amount. So 4,000, that is income for the business. So how you will show? You have to show in the credit side of revaluation account by bad debts recovered account 4,000 because it is an income. Now you can't write by debtors and all, you can't write. No more debtors. We have removed debtors. This is income. So you have to write by bad debts recovered account in the credit side of revaluation account, and whatever amount you received, you means business, you have to show. Understood?
Yes, ma'am.
Oh.
Yes, ma'am.
Okay, dear. Now the 15th adjustment. Revaluation expenses paid by A rupees 500. Again, what I said, suppose any asset is taken by any partner, you are going to debit partner's capital account to that asset account. And if in profit, revaluation account will be credited. If there is loss, revaluation account will be debited. Simple. Now what you are going to write for this? See, revaluation expenses paid by A means A is making payment of revaluation expenses. A is the partner and revaluation expenses are expenses of the business. It is not expense of any partner. So suppose partner is making payment of revaluation expenses, business needs to pay them back to that partner. So now what will be the journal entry? Revaluation account debit because revaluation expense will come in the debit side of revaluation account. But business is not making payment. Suppose the business is making payment, then revaluation account debit to cash you will write, to cash or to bank. But partner is making the payment, so you have to credit partner's capital account. Now business will make payment to partner this 500 rupees later on. Now in the credit side of partner's capital account, you have to write by revaluation account and you will write this 500 rupees. Any doubt in this?
No, ma'am.
Okay. Now the next. 16th adjustment. Very important again. Provision for bad and doubtful debts. There are different cases and students get lot of doubts in this. See, provision for bad and doubtful debts. There are different. How many cases I have given? 1, 2, 3. Then I think 3 cases I have given. So let's see one by one. First, suppose in your question balance sheet asset side debtors are given 50,000. Now in adjustment, in your question in adjustment they are saying bad debts 5,000 and 10% provision created on remaining debtors. Bad debts 5,000 and 10% provision created on remaining debtors. Always remember and kindly write it down also. Whenever in adjustment bad debts is given, whenever in your question in adjustment bad debts are given, whether the percentage, if percentage is given you can calculate on debtors. Suppose directly amount is given like in this 5,000, you can subtract from debtors. So always first you have to subtract the bad debts from debtors, then you have to calculate provision. But what is the condition? Bad debts should be given in adjustment. So kindly write it down as important note. Whenever bad debts given in adjustment and question is asking you to create provision like this, first always subtract the bad debts from the debtors, then whatever amount come you have to create provision on that amount. Now how to show, how to present this? See, in revaluation account how you will do this, bad debts is a loss which is given in your adjustment. It is a loss for the business. If there is any increase in loss, you have to show in the debit side of revaluation account. So in the debit side you will write to bad debts 5,000. Now what about the provision? Provision you have created on 45,000. How? Total debtors 50,000, bad debts 5,000 less 45,000. On that 45,000, 10% provision you have created. That comes 4,500. Again this provision is also a loss. It's a, you can say it as a liability or as a loss. Liability loss, there is increase in liability, that is also loss. The loss is also a loss. So anyways you have to show in the debit side of revaluation account. First you will show to bad debts 5,000. Second you will show to provision for bad and doubtful debts. Don't write P, F, D, B, D and all these. Teacher will cut your marks. Kindly you have to write the full form. Don't use any short forms please. Write the full form. To bad debts, to provision for bad and doubtful debts. No shortcuts. It is only for me, not for you. Okay? So write full form.
Yes.
Yeah. Okay. So in this way 9,500 you will show in the revaluation account debit side. Now what about the balance sheet? New balance sheet. We are talking about new balance sheet. How you will show in the asset side, how you are going to present the total debtors shown in the question, that you will write in the inner column 50,000. And in adjustment that bad debts shown, you have to subtract that bad debts from debtors, because now you are not going to get this 5,000. So you have to subtract. Now 45,000. In this 45,000 also business has a doubt that 4,500 debtors may not make the payment. So again you have to subtract provision for doubtful debts 4,500. So finally good debtors are 40,500, from whom business is expecting, business will get the full amount 40,500. In this way, so in outer column you have to show 40,500. In this way you should present. It is clear, the first case is clear, Pavitra and Sachin?
Yes.
Okay.
Yes, ma'am.
Okay, now we are moving to the second case. The same, suppose in your question balance sheet debtors are given 80,000 for example, and already the less provision for bad and doubtful debts 4,000 is given in your balance sheet. Then outer column 76,000, asset side of the balance sheet. This is the question. In adjustment what is given? Bad debts 5,000, provision 10% created on remaining debtors. See, now again they are saying that bad debts 5,000, then provision 10% created on remaining debtors. How to do this? Always, whenever, as I told you, whenever bad debts given in adjustment, no doubt you have to subtract from debtors first. The first step is bad debts given, first you have to subtract it. Here bad debts is given in adjustment, total debtors 80,000, so subtract that 5,000. Now the good debtors we are assuming 75,000. But again what they are saying, to create 10% provision on that. So after subtracting bad debts you have to create provision. So if you are creating provision on 75,000 10%, 7,500. Now the question tells this 7,500 provision you should create. Means you should have 7,500 as separate fund, so that in future if bad debts happens, this 7,500 you can use it for compensating the loss. Now try to understand, already provision is created for 4,000. Already in question it is given in your balance sheet, the question already you are seeing that provision 4,000 is there. But new, that is old provision. Whatever you are seeing in your question balance sheet, that is old provision. We call it as old provision. Now the question in adjustment we created new provision 7,500. The concept is already provision, if any provision is already suppose created, like in this case, you have to use that provision for bad debts. Always remember, provision for bad and doubtful debts are created only to compensate the loss of bad debts. And in our question bad debts is 5,000. 5,000 bad debts is there, which is a loss for the business. So this 5,000 loss you have to compensate from the provision, old provision already created 4,000. So if you do the adjustment, like already in the previous you thought, you means business thought that there will be loss of, means we will not receive 4,000 rupees from debtors. That is why this provision for bad and doubtful debts created. And in actually that is in real 5,000 bad debts happened in business. So 5,000 we couldn't receive. So this 4,000 we can utilize. Already we booked the loss of 4,000. Already we booked. So only 1,000 you have to show as bad debts. To bad and doubtful debts, you will show in the debit side of revaluation account only 1,000. First thing, only 1,000 you have to show. Then what about this? See, if you are showing to bad and doubtful debts only 1,000 as loss, because you are what? You are adjusting that 5,000 loss from this 4,000 old provision. Then what about the new provision? This 7,500 is the new provision which you are creating. This you should show again in the debit side of revaluation account. To provision for bad and doubtful debt 7,500. Anyways, the total loss will be 8,500 only. How 8,500? Already there is loss of 5,000. Okay, if you see in this way also, already bad debt is a loss. How much? 5,000. Again we are creating provision 7,500. So if you see total loss 12,500, but already the old provision created 4,000. So if you subtract that, you will get 8,500. Are you understanding?
Yes.
Yes, ma'am.
Yes, Pavitra?
Yes, ma'am. I understood.
Okay, fine. So in revaluation account, total 8,500 loss you will show. It includes bad debt loss as well as provision for doubtful debts. Both you can club together and write it down, or separately also you can write it down, no issue. To bad and doubtful debts you can show 1,000, then you can write to provision for bad and doubtful debts 7,500. It depends on you, both are correct only. Now what about the new balance sheet? Suppose you are preparing new balance sheet, then how you will present these things? Debtors 80,000 given in your question. First, as I told you, bad debts given in adjustment, you have to subtract 5,000. So when you subtract that, total good debtors you are expecting 75,000. Now you are thinking that 75,000 debtor, they will definitely make the payment. But again, due to some reason, you come to know that there may be bad debts arising in future for more 7,500. So again you have to subtract provision for bad and doubtful debts 7,500. So finally good debtors you will show 67,500, which the business is sure in future definitely these many debtors will pay the amount. 67,500 business will get out of 80,000. I hope now it's clear. Yes?
Yes. Yes, ma'am.
Okay, fine. So now we are going to move to the third adjustment. Again, suppose in your question, balance sheet debtors given 50,000. Again, their provision for bad and doubtful debts is also given 5,000. So debtors in the outer column, asset side, it is given 45,000. And in adjustment, suppose the question tells you bad debts 1,000, provision is created 5% on remaining debtors. Suppose this is your question. Now see what will happen. Already as I told you, there is no change in our concept. Whenever bad debts given in adjustment, you have to subtract first from total debtors, then you will calculate the provision. So total debtors 50,000, subtract 1,000, so 49,000. In this 49,000, you have to create 5% what? Provision for bad and doubtful debts. Okay, you have to create. So when you create, yes, you create 5% whatever it is coming. Before that, what you have to do, as I told you, whatever the old provision we have created 5,000, that will be utilized to compensate the loss happening in business due to bad debts. So 1,000 loss is happening due to bad debts. So this loss you will compensate from old provision already created by the business, 5,000. So 5,000 minus 1,000. In old provision already we are having how much? 4,000 rupees left. Old provision balance, already 4,000 rupees is left. Now we are creating 5% on how much? We are going to create 5,000 on 50,000 minus 1,000, that is 49,000 you are going to create. So now if you see how much you are going to get, yes, are you doing the calculation? How much excess provision created? It will come excess only. How much excess provision is coming? See, if you create 5% on 49,000, it will come 2,450. Okay, 2,450. Just do the calculation and check whether it is coming or not. You have to calculate the new provision 5% on 49,000, which will come 2,450. Now you should create provision 2,450 but you have to see whether old provision is there or not. In old provision also there is balance left. How much? 5,000. Subtract the bad debts 1,000. 4,000 is already left. 4,000 is already left. 4,000 rupees you are having already in your old that provision for doubtful debts, and they are asking you to create 2,450. Only 2,450 you should create. So excess provision, how much you are having excess provision? How much excess provision is there which is not required now? Yes, anyone? Pavitra or Sachin, can you tell me how much excess provision is there?
1,550.
1,550 is the excess provision, right?
Yes, ma'am.
This is income for the business. So that income you will show in the credit side of revaluation account. Are you understanding how we are getting all these?
Yes, ma'am.
Yeah. So now this 1,550 rupees is income, excess provision. We don't want this provision. So it is income, decrease in liability. That is why you are showing in the credit side of revaluation account by provision for doubtful debts 1,550. And suppose you are preparing new balance sheet, then how you will present? Total debtors 50,000 minus bad debts given in adjustment 1,000. 49,000 you will create 5% provision 2,450. So finally in the outer column you will show 46,550 as good debtors. I hope it's clear, or you are having any doubt?
It's clear, ma'am.
Okay. Very, very important adjustment. So kindly try to understand, practice at home also. Now we are moving to the 17th adjustment. Again extremely important. Each and every adjustment are very, very important. Now outstanding expenses paid rupees 1,000. Suppose you don't read the question carefully. Suppose you are reading only outstanding expenses and doing the sum will go wrong, because there is a difference between outstanding expenses paid and outstanding expenses. See, when I am saying outstanding salary means there is increase in outstanding expense and it is a liability. So we can say there is increase in liability. You can show in the debit side of revaluation account. And if you are preparing new balance sheet, there also you can show in the liability side of the balance sheet as outstanding rent, salary, wages, whatever given in your question. That liability you can show it. But when I am saying outstanding expenses paid means already there was the liability in the business which is paid now. If you don't read nicely, you will do the mistake. So there is a difference. Now what will be the journal entry for this? This will not come in your revaluation account. This is not increase in liability. What is the meaning of outstanding expenses paid? Already there was some liability in the business. Now that liability is paid, which is normal. There is no profit, no loss in paying the liability. Whatever amount business owed, business made the payment. So now the entry will be outstanding expenses account debit to cash. So you see there is nothing to come in revaluation account. Are you understanding the difference between outstanding liability and outstanding expenses paid?
Yes.
Okay. Pavitra, what about you, dear?
Yes, ma'am.
Okay. So always remember, in revaluation account, if there is any profit or loss, that amount will come. We are not going to write everything in revaluation account. Now this is also extremely important. Write it down, very, very important. Stock is undervalued by 10%. Again there are chances you people will make mistake. What you will think? Stock is undervalued by 10% means they have undervalued stock, you will see in the balance sheet the value of stock, and what you will see, you will just calculate 10% and you will do. No, stock is undervalued by 10% means whatever the amount of stock is given in your question in balance sheet asset side, already 10% they have shown less. They are not asking you to calculate 10% now and show. Already they did the mistake. It is a mistake already done. You have to rectify this. Stock is already undervalued by 10% means you don't have to calculate now the 10%. So what you have to do? First you have to calculate the original value of the stock. Then what you will do, whatever amount is given in balance sheet, that is already reduced value, that you will subtract, then you will come to know what is happening. So here what you have to do, see, suppose in your balance sheet stock value is given 54,000. Okay, this 54,000 is only after reducing this 10%. So you have to write 54,000, then multiply 100 divided by 100 minus whatever amount is undervalued, the percentage. It is percentage, that is why we are doing in this way. Simply if amount is given, directly in simple way you can do. Whenever this percentage is given, you have to do in this way only. Whatever amount of the asset is given, just multiply by 100, divide by 100. If it is undervalued, then subtract the percentage. If it is overvalued, just add the percentage. Kindly write it down. This is very, very important. It comes in exam. So here it is undervalued, so I am subtracting that 10. Just now solve it. 54,000 into 100 by 90. So when you solve, what you are getting? You are getting 60,000, which is original cost of the stock. By doing all these, what is the purpose of doing all this? In order to get the original cost. Original cost is not given in your balance sheet. Already it is reduced 10%. In order to get the original cost, you are doing all these. So original cost of stock will be 60,000. After knowing the original cost, now you can simply calculate 10%. It comes 6,000. You can check also. So when it comes 6,000, then only after subtracting 6,000, they have shown 54,000 in the balance sheet after subtracting this 6,000. So think, if you are calculating 10% of 54,000, question will go wrong. That is the reason first you have to calculate original cost. How to do? Whatever given in your question, write that amount, multiply by 100, divide by 100. If it is undervalued, minus the percentage. If it is overvalued, add. Then by doing this, you will get original value of the stock. Then calculate 10%, like I am talking about this question. So 6,000. Now this 6,000, if this 6,000 is undervalued amount, we want only by how much the stock is undervalued. Now you have to show in the credit side of revaluation account this 6,000. Why? Because if any asset is undervalued means you are showing less value. This is a mistake which you have to rectify. Original value is 60,000, but in balance sheet you are showing 54,000, you are showing 6,000 less. So there is increase in the value of asset. You have to show more 6,000, na? That is why you have to show in the credit side. It is income. Credit side revaluation account by stock 6,000. Suppose you are preparing new balance sheet. Now you will show 60,000. Asset side of the balance sheet, the value of stock will be 60, not 54. Are you understanding, dear?
Yes, ma'am.
Yes, Pavitra?
Yes,
Very, very important, dear. Now see the 19th adjustment. Stock is overvalued by 10%. This comes in exam. Suppose in adjustment it is given, stock or any asset is given, overvalued by percentage. Then and book value will be given in balance sheet 66,000 for example. What you will do? The same thing you have to apply. First you have to calculate original cost of the stock. 66,000 given in question, multiply by 100, divide by 100. What I said, If overvalued, you have to add the percentage. If undervalued, subtract. Here it is overvalued, add plus 10. Solve it. 66,000 into 100 by 110. 60,000 you will get. So actually the original value of the stock is 60. But in balance sheet you are showing 66. 6,000 more by mistake you are showing. Now you have to reduce, because always we have to show the original value. Why to show overvalue? So now there is loss because there is decrease in the value of asset. So revaluation account debit side you will show to stock. You are going to reduce the value of the stock which by mistakenly overvalued 6,000. And suppose now you are preparing new balance sheet. Now you will not show 66. You will show only 60,000 value of the stock. Understood?
Yes, ma'am.
Any doubt, Pavitra?
No, ma'am, it's clear.
Very good. Sachin, you are having any doubt, dear?
No.
Okay. That's all for today, dear. Okay. Next day, we will be doing adjustment of capital, retirement chapter, then the loan account and everything. Okay. We will be doing on Friday. Once we finish this chapter, we will move to death, then dissolution. Once we finish the partnership, then we will move to that shares, cash flow, debentures, all those. Lot of chapters in other book. Okay. Is it okay?
Sure, ma'am.
Yeah. Pavitra, you have any problem if I am going slowly?
Ma'am, actually, I'll be having my prelims from November end or December first week.
Your mother wrote the message, I saw, but actually I go in this way only, dear. From beginning, for the last 5 years I am taking the class. I can't hurry because I don't want to leave anything. I just want to tell you each and everything, so it will be like this only. In the beginning itself I told to your mother that I will go in school, they will rush, they will finish everything, but I will take like this only. I want the students to learn each and everything, not even a single thing should be missed. It's my thought, that's why I'm telling. Okay.
Okay, ma'am.
You are not going to face any problem in your boards, guarantee. Okay, in your boards definitely you won't face, so don't worry about. But in school exam definitely I will be like this, and in school they will finish the syllabus. All the year it's like this only, but in boards all my students they do excellent result. All my students they really do very good results. I am like slow teacher only. I go slowly only. I don't
Okay,
like
ma'am.
rushing.
No
That's why I want to just make the things clear. That's why I'm telling. And what about Sachin?
Yes, ma'am.
Yes, dear. Like for you also, you want that hurry, rush, steady, or slow and steady wins the race.
Ma'am, no, ma'am. This is fine. I can understand what you're teaching.
Very good. That's what I can't hurry. That's my problem. I will go like this only. Okay, fine. That's what I just want to make the things clear. Okay, dear. Thank you. That's all for today. Friday we will continue the class. Yeah.
Thank you, ma'am. Bye. Good night.
Bye. Good night, dear. Bye. Thank you.